All right, guys and gals, back to work. Boy, fantastic job today. It sounds a lot of you guys made some pretty good money, so well done on that. But now let's get back to work. Let's refocus. We got one more day left. Let's keep on executing well and finish up tomorrow with some more green on Friday morning. Now, charts look beautiful tonight. But I'll tell you, there are a lot of clues on these charts that are telling us we might have some bull traps on our radar for tomorrow. We'll talk about why I say that and most importantly, how to make some money on a couple bull trap patterns I'm looking for tomorrow. By the time we're done tonight, everyone will have an easy roadmap to make some money on Friday morning as well. Now, charts are all ready to go. Let's not waste any more time. Enough of the intro. Let's get into it and figure out where the best trades are waiting for a finally Friday trading session. Boy, Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have three very important clues on these charts tonight that are telling us where the winning trades are waiting for us for tomorrow. Two of those clues are right here on these hourly, these 60-minute time frame right now. First clue is we know the buyers took control of momentum yesterday with that big short squeeze we talked about earlier in the week. Now we have a very big move going higher. One very important clue on the 60-minute is the size of this big move. Big moves, it's going to be difficult to get more buyers excited at buying at such high prices. That's one very important clue. The second important clue is we are now right in the underbelly of that big trading range we saw late in the month of August. We know that markets love to break out and pull back, off previous trading ranges. So running into major resistance up overhead. So clue number one is we're way high up right now on the chart. Clue number two, we're running into banging our head now against some pretty significant resistance. Those are two important clues, but I'll tell you, I don't think they're the most important clue for tomorrow. And they're not the reason why bull traps are on my radar for tomorrow. I have one, I think, the even more important clue on some faster time frames, some tick charts. We're going to grab that in just a moment and wrap this all together for Friday morning. Before we do that though, let's check schedule for tomorrow because tomorrow it's kind of your typical Friday. Now, Friday mornings, there's two things on my mind for tomorrow, and I want to make sure you're on the same page with me. First things first, that consumer sentiment number, I know it's only a green star number. It's not nearly as big as the CPI report we saw on Wednesday. But don't underestimate the power of those consumer sentiment numbers, especially with the inflation stuff going on right now. I will definitely be keeping that on my radar. I always pay attention whenever we have news at 10 o'clock Eastern time. So that is one thing on my radar for tomorrow. But equally as important for tomorrow is tomorrow's a Friday. Now, let's face it, Fridays are not like any other day of the week. First of all, markets are not as liquid after 11 o'clock Eastern time on a Friday morning. And really more importantly, we as traders are not as disciplined. We're not as consistent on Friday afternoons or after 11 o'clock on Friday. I know I'm not the only person out there that made foolish decisions late in the day on a Friday. We're tired at the end of the week. So knowing that, my mindset on a Friday is I want to get in as early as I can, find entries as early as I can. When the markets are liquid and I'm at my best, I want to take profit quickly. My personal opinion is everything gets so much better when there's some green in the account going into the weekend. So I always sort of take a little bit of profit, quick profit, remove risk, leave a runner. About half the Fridays, 50% of the Fridays, they make these big runs in one direction because, traders, they start gambling in the afternoons. The markets are liquid in the afternoons. So Friday mindset, in early when I'm at my best. Take profit quickly. Get some green on the screen and hit the weekend. Get rid of risk quickly. And again, if you can, leave a runner because go back and look for yourself. Fridays, they love to run. Keep the news at 10 o'clock on your radar and keep that Friday mindset front and center for tomorrow. Now let's get back to our charts though, because I mentioned earlier, 3 clues. We talked about the first 2 clues already. Let's grab the S&P and SPY here first. We'll go to the Nasdaq here in just a moment. The S&P and Nasdaq are pretty similar overall. Now, we covered the hourly chart earlier, big move up into resistance, but there's more important clues on the tick charts right now. Now, remember, Tick charts make pattern recognition so much easier. This is a 7,000 tick chart, by the way. All the time frames you'll see in the upper left-hand corner. And in case you're watching for the first time right now, welcome to the channel. What took you so long, by the way? I'm kidding with you. That's a 21 EMA. It is pretty much the only indicator we need to find lots of winning trades each week. Now, this one really big clue here on this tick chart, we did get that two-legged pullback. Beautiful two-try. And although we didn't get it to really cook, right, it chopped around a bit over lunch, but still a pretty good setup. Most important thing, though, is this is a relatively shallow two-legged pullback. We didn't get that deep correction that most of us were waiting for. Again, still a pretty good setup, but usually whenever we get a shallow two-legged pullback that keeps on grinding, the market oftentimes runs out of gas, right? It runs out of buyers. So this tells me now we should start looking for some bull traps and get that big correction coming back down. Now, I have 3 different types of bull traps we'll talk about tonight. And then later on in the video, we'll talk about how to buy it as it rolls lower. Let's talk about the first one. The first bull trap is simple. It's called a crown reversal. I want to see this price go up. I want to see it take out that pendulum swing. I'm also watching that breakout into measured move. Lots of resistance up overhead. A crown reversal is very simple. It's buyers trying once. It's a lower low. It's buyers trying twice. 1 try for the buyers, 2 try for the buyers, bull trap off that high. Now, like I teach in the free video course, anytime we talk about bull trap patterns, it's a strong red candle closing below that 21 EMA. That is bull trap pattern number 1. It's called a crown reversal. Now, that's kind of the gold standard when it comes to bull traps. A lot of times, though, this thing will whip up and get whacked right back down again. Keep your eyes on a V-top reversal. Now, V-top reversals can be very frustrating because you're not going to get that bull trap entry we all want up at that high. What happens, though, is it rolls over and starts to grind down. It will separate away from that 21 EMA. Now, draw a trend line off those lows. Bring that trend line up around the highs. Don't chase after it going lower. Look left. What I want is I want to find an area where I can get above a prior swing and get that first test off the high of the channel. In our trade room, we call these a first test trap. It's the first touch of that new channel, and it's a bull trap because it's right above that high. In the trap setup, you want to get that strong red candle closing firmly below that 21 EMA. That's bull trap pattern number 2. It is a V-top reversal. So if we go higher, those are 2 ways I want to be selling bull traps for tomorrow. Let's talk about what might be the easiest bull trap for tomorrow. Maybe we don't go higher. Maybe we end up rolling over and running lower. These can be even easier. Watch closely on this. If we see this thing start rolling over and running lower here now, what's going to happen is this range down here is going to act like a magnet. It's going to want to rotate all the way to a pendulum swing on the other side of that trading range and ultimately give us that bigger correction that most of us wanted earlier this morning. Now, very important. When it starts to free fall like this, that voice in your head is going to say, get in, get in. You can do whatever you want tomorrow, but I will not be chasing after that move. This is what you want to see here. As it rolls lower and goes into that free fall, what you want to do is start looking left and finding some of these lows. Connect off that low, bring it up around that high, find that channel. Now, my favorite trade is to look left, find some prior swings, and wait for that pop up into the first touch off the high of that channel. Now, this could really be any of the entry patterns you guys are learning in the free video course. I like to get bull traps above prior swings. Oftentimes, though, the buyers will come in and get long off the 21 EMA. That's where failure setups live. We get below the moving average, pull back. That's that failure into pullback combination. Now, this is probably the most desirable out of all of them because, very important, the size of that breakout leg can now be pinned at the deepest part of that pullback and create a measured move. Remember, if you want to make more money, don't trade more often. Get better at letting your winners run. And knowing how to do that is more than half the battle, right? So now we know where to leave the runner is. And later on in the video, I'm going to talk about how to start buying those dips a bit later on the Nasdaq. Now, let's slow down for a second because I'm covering a lot of ground here right now. And I know most of you guys watching right now, you know why we love traps. You're making money on failures and all kinds of these setups. But if you're watching for the first time right now, this might be way over your head. A new strategy, a new language to learn. But don't you worry, I teach this entire roadmap and I teach all the entry patterns. I have hundreds of examples of failures, traps, bull traps, crown reversals. I cover so much more of this stuff in our free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room each morning that tells us where to find the best winning trades each day. Most importantly though, I want to help you start timing better entries, making more money you're trading. I'll teach you 4 my favorite entry patterns: traps, failures, pullback combinations. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video course, learn the roadmap. It is perfect for anyone who is serious about making money in these markets. And keep in mind too, I'm going to put all the important links tonight in the description of the YouTube video. I'll put the free class links down there. Don't forget too, we trade together every day in our trade room. I'll put trade room membership links in there for you. And also too, I post a lot of charts and videos and mindset stuff on Twitter or X throughout the day. If you're on Twitter, X, give me a follow. Again, all the important links to the details in the description of that video. But now you know 3 different types of bull traps. It was that crown reversal, lower low bull trap there. It's that V top, right? Grinder down. And again, it's that breakout pullback, right? Find that pop and shorten that pop back on down again. Now, I want to talk about buying a nice deep pullback a little bit later on in the video. We're going to cover that in just a moment. Before I do that though, what if I'm wrong, right? What if I'm wrong, right? We're pretty bullish overall right now. What if I'm wrong on this? If this market starts ripping and going higher here, you know, I'm wrong all the time. Being a winning trader is not about being right or wrong. It's about being profitable. So I want to make sure we're ready for this. If it does keep on going higher here, now we are way, way high up. This becomes a trading range. And what do we always talk about? Anytime we see a range breakout, what do we look for? We look for a 2-legged pullback, right? 2-legged pullback is 1 leg, 2 leg, a bit more than a measured move. We saw that earlier today as well, right? A bit more than a measured move. Think about that failure into that trap combination as we're going higher, right? So, you know, I have no crystal ball for tomorrow. I could easily be wrong about these bull traps, but if we keep going higher, this thing keeps on squeezing higher and grinding higher on a low volume Friday, I'm not going to chase after it. We're going to wait for the price to pull up and start pulling back. And again, look for that 1 leg, get underneath the moving average, 2 legs, a bit more than a measured move. Remember, don't pick the bottoms, right? Don't go picking bottoms. This may wind up rolling over. And if it does roll over, right, if we do run up and then whoop and roll over again, you know how to trade that, right? The minute it starts grinding down, mark that low, mark that high, find that swing, and don't miss that first test trap off the high of that channel. But again, pop up, keeps on grinding higher, 2-legged pullback, trap those bears in, right? Trap those bears in. Don't pick the bottom. Use that classic failure pattern you guys are learning in the free video course. 2 tries for the bears. Why 2 tries? Because now you're trapped, right? Now your stops are sitting right there, and I can now buy into those stop losses. I was to go out and look to add on to it too with the trap pattern, higher high in price, and a move right below that low. And remember, anytime we see a range breakout, the breakout leg is the measuring leg, right? So breakout leg, measuring leg, pin it off that low. If you want to make more money, right, get better at holding on to your trades. That will tell you where that measured move is going higher. So again, if I'm wrong about the bull trap off the high, if this thing keeps on grinding higher, we'll keep looking for buying as low as we possibly can. And to do that, it's always a two-legged pullback into a failure trap combination. A lot of examples of those, of course, inside the free video course. I would love to see it though go up and just get whacked right back down again. Let's talk about now over on the Nasdaq. Let's talk about how to buy some dips, right? How to buy some dips, because in all reality, that would be the best scenario, right? Get some bull traps up here and then buy some deeper pullbacks overall. Now, before I dive into that, if you're enjoying this video right now, it would mean a lot to me if you hit the subscribe button, hit the like button, and I know that you got a trading buddy out there that would love to benefit from these videos as well. Grab the link to the video, share this video with a friend. Thank you so much for your support. It really helps me grow this channel. It would mean the world to me. Take a few minutes, hit the like button, make sure you subscribe and share with a friend. Thank you so much for tuning in, sticking around and supporting our YouTube channel. So now that I beg for your like button hit here, let's keep rolling here on the video. On the Nasdaq, same thing, right? Big move up into resistance here. Again, we might keep going higher. There's definitely potential. We may keep on grinding higher into Friday. But whenever we see moves like this, we're looking for a deep pullback. Now, over on the tick chart, the Nasdaq didn't even get the two-legged pullback, right? The Nasdaq never got the two-legged pullback. So we have had no meaningful correction, market grinding higher. And one very cool clue here on the Nasdaq is that trading range, the amount below the range. We call these pendulum swings, right? In the free video course, we're right there. We're right there at overhead resistance. So way, way high up. We've got no meaningful correction yet on the Nasdaq really, or the S&P. Again, same basic idea, right? On the NQ, all the same stuff. If we run up, it's that crown reversal. It's that same crown reversal we mentioned earlier on the S&P, lower low in price, bull trap off that high. One of my favorite trades is that V top where it pops up, takes out that pendulum swing, gets whacked back down and starts grinding going lower. These are easy, right? Mark that low, mark that high, find that prior swing. Don't miss that first test. And like I mentioned earlier, if this thing really starts to roll and run lower here, what I'll do is I'll connect these lows, find that channel at the top, look left, find those prior swings. And again, this could be a bull trap. It could be a buyer failure. So all the same stuff we talked about before on the S&P can apply here to the Nasdaq as well. And again, the size of that breakout leg, that's going to be your clue here of where that target will be down bottom. Now, how do we buy down here? Right, what's the best way to buy it? Let's say we do get that bull trap. We get that nice juicy drop here off the high. How do we buy this thing right now? Well, first of all, as the market goes lower, this could really get very aggressive, right? So I'm not going to try to pick the bottom on this. What I want to do is look at prior levels of basically prior swing lows, right? Find support levels. Ideally, it's down below the lowest part of the pullback for today. But the reality is, whenever we want to buy a deep pullback like this, we don't want to try to pick the bottom on this. What I want to do is let this thing pull back, because I don't know how far it will go, right? It might go here, it might go here, it might go even further. We're not going to pick a bottom on this. What we'll do is we'll have that same pattern setup we saw this morning on the Nasdaq. Once it pulls back to that moving average, again, I don't know how far it will pull back. What I do know is this is a horrible place to be selling. I would not want to sell way down here. You want to sell. You want to be deep in the green on that trade by the time it gets all the way down at that low. So if I can get some rookies coming in and trying once, going higher, trying twice. See, in this situation, all of that momentum is going to give the bears a chance to put a fight, right? They're going to fight this thing and run lower. I need their stops, right? I need their stops down here to fuel that move going back higher. There will be buyers down here because, again, we're so bullish on the 60-minute time frame. It's just going to get a bit lower to entice those buyers back into the market. Now, remember this sequence here. Remember the sequence here. It's a two-try failure pattern, the same thing we teach in the free video course. But then as it starts running higher here, who's waiting up here? Bears are waiting up here. So we have to buy as low as we can as it rolls higher here. And to do that, it's always going to be a trap pattern, right? In the free video course, we call these failure into trap combinations. Remember that trap pattern is always a higher high in price. It will separate off that 21 EMA, always a trap entry, strong green candle closing above the 21 EMA. Now, oftentimes what happens is we get that big run down. There are so many buyers down here, it just whoop and runs right back up again, right? We see these all the time in these markets. These are tough. These are not easy. They're not my favorite, but again, my job right now is to give us a roadmap, no matter what we get for tomorrow, right? The making money in trading is not about being right or wrong. It's about having a game plan and making profit on whatever the market throws at us. If it V bottoms off of that low, it will begin to grind going higher here. Now remember, all of that momentum going lower is going to want to retest that low. You do not want to chase this thing running higher. What we're going to do is, remember, the giveaway is the grinder. The grinder is the giveaway. Mark off that high, mark off that low, right? Look left, find some prior swings, and don't miss that first test trap off that low. And again, this could be a trap pattern like this. It could be a failure pattern. And really the most common entry patterns there are failures and trap patterns. And again, a lot of examples of that inside the free trading course. And also too, keep in mind too, a lot of times we see a big move down. We get a nice, easy, 1, 2, nice, easy squeeze back up again. But you know what happens, right? We run into overhead resistance and the market simply runs back down and takes out that low. This is a winning trade, right? We get our 1-to-1, right? We get our 1-to-1 first target on that. But for whatever reason, right, the bears come in again because it's so bearish on that run lower and they take it back and they take out that low. Now remember, this is not a bear market overall. A double bottom like this is a gift to the buyers because the way I see it at least is anybody who sells right here, they're taking their profit, right? They become buyers at that low. So sellers become buyers when they retest that low. Is this a good place to sell short? Please say no. Please say no. No, right? It's not a good place to sell short. You want to sell high, not sell low. So as we now pull back lower now remember, I don't know if it's going to bounce off that area. It may go a bit lower than that. What I do know though is that once it pulls back and I start seeing bears come in and try a few times right here, these are rookies. These are rookies. These are not big lot traders, right? Big lot traders, they sell high, right? These are small, tiny lot traders, little paper napkin stop losses, right? Run those stops. Again, we call these double bottom retests. They're oftentimes the most lucrative trade we see because again, everyone's trapped, right? Everyone's trapped. The bears up here become buyers down here. And of course, they're squeezed at the lows here. Remember, this is always that failure into that trap combination. And I say this over and over again. I know I'm repeating myself, but welcome to trading, right? Trading is repetition. Okay, trading is repetition. We're not looking for new patterns every day, right? Trading is repetition. Once you learn what works, you keep on pushing that button until the button breaks, right? That's the way trading works, right? So again, it's a failure pattern into a trap combination. And the goal, of course, is to run all the way back up and take out that high. This is the meaningful correction that we're all kind of hoping for that we get tomorrow or earlier on in the week. One last variation is a shallow pullback trap. So for example, we might get a run up, we might get a beautiful bull trap off that high, run back down, the amount above the range, the amount below the range, we may not get that big dump, right? It may not roll over like I want, right? I would love to go up top, roll over, grind like that. That's the giveaway, right? The grinder is always the giveaway off that channel, but there's no guarantee for that. We may only get a pendulum swing back down again. Now, remember, it's an overall bull market. It's an overall bull market. So with that channel coming up off of that low, with that prior high acting as support, this is a great spot to be a buyer. It's a bit higher than I would like to be buying. Now, this will be a true test of all the OGs who watch this YouTube channel. Whenever I'm buying relatively high, What's the one entry pattern we use? Whenever I'm buying relatively high or selling relatively low, what is the entry pattern? Let me know in the comment section. If you know it, type in the comment section. It's always a trap. It's always a trap. Whenever I'm buying high or when I'm selling low, it always is a trap. And again, this isn't buying high in this chart, but when you understand the bigger picture, it is buying relatively high. Again, we haven't got any meaningful correction yet. So again, it's a bear trap. It's a bear trap. Bears try once, bears try twice. And the trick of this is the higher high in price and that trap right below that low. This oftentimes will put two traps back to back. Bear trap into another bear trap. Now, this will really test your knowledge of this, right? If you understand these two patterns, you get an A+, right? You are the king of the trap, or the queen of the price action. Those are the same pattern right there. This one, right? This one I think makes a lot more sense to people because it's one try, two try for the bears there. This one, as we go higher, kind of a classical continuation bear trap. Same exact pattern. One is more of a reversal trap. The other is more of a continuation trap. They both have the higher high in price. They both have the move right below that low. And they're both, in this case, trying to go back up and take out that high. Remember, tomorrow is a Friday. So early in, get some green on the screen, get rid of risk early, and leave that runner. All right, guys. Well, I'm getting excited just talking about this. Hope you love the video here tonight. Now, that's the plan for tomorrow. Don't forget, though, tomorrow morning, 8 o'clock Eastern time. Come trade this stuff with us, guys. The easiest way to start making money in these great markets is to learn and trade along every morning in our trade room. As always, I'll put all the important links in the description of the video tonight. Start first on the free video class. Give me a follow on Twitter or X. If you have any trouble getting access to our video class, I know some folks get errors on the sign up form. Any error messages, any issues, use our live chat, call the office, or drop me a comment in the comment section below. Right, guys? Hope you love the video tonight. Hope you use this knowledge to make a killing on Friday trading session. And hopefully I'll see you sometime soon trading with me in our morning trade room at 8 o'clock Eastern time. In the meantime, be well, make some money for us tomorrow, and we'll see you guys next time. Adios, amigos. Bye for now.